Hey you guys, it's Janine here, and today I wanted to answer the question of whether or not you can claim a loss on your principal residence when you're selling it for tax purposes. Now, we've seen a decline in the economy here in Alberta, and there may be individuals that are in the situation where they want to move potentially maybe into a smaller home or are relocating to a different city and have found themselves in the position of a loss when it comes to the sale of their property. And many people wonder if this is the case. They want to know whether or not they can actually claim that loss on their tax return. Now, the short answer to this is unfortunately no, but there are a couple of things that you need to take into account when determining whether or not you can actually claim this loss. The first is whether or not it is considered a rental property. If it is considered a rental property, you have the ability to claim income losses each year when you are claiming things like depreciation or CCA and all of the expenses that go along with actually leveraging this rental property for use to earn income. That being said, this is not considered a capital loss. It is actually going to be a loss from an income perspective, and you would need to fill out the appropriate schedule on an annual basis when you are filling out all of the information for your rental property when you go ahead and file your tax return. Now, there is no such thing as claiming a capital loss on a depreciable asset, so you would be ultimately claiming what we call a terminal loss should you have a rental property in place when you are disposing of that total asset class. Now, if you are looking at converting your principal residence into a rental property so that you might be able to claim some losses, you do need to keep in mind that on the day that you actually change that principal residence or the home that you live in to a rental property, you are deemed to have disposed of it. This means that you won't actually be able to claim a loss on the amount that it was valued at on the day of the deemed disposition. So whatever the market value is based on the surrounding areas and economic influences, you would not be able to claim a loss on any of that. So an example is if you bought a $500,000 house and you were going to be converting it into a rental and it was only worth $450,000. On the day you converted it to a rental and the market stated it was only worth $450,000, you wouldn't actually be able to take a loss on that $50,000 between the $450,000 and the $500,000. So these are a couple things to keep in mind when you are looking at whether or not to potentially convert to a rental property, or if you can start to claim any losses on your personal home. When it comes to that personal residence, you actually aren't taxed on the capital gain when you sell, which also means that unfortunately you can't actually claim a loss when you sell as well. That being said, it may make sense for some individuals to sell their home even if it is at a loss, so they can start to get some of that equity out, live in a more reasonable, cost of living, or maybe move from actually owning to renting and leveraging some of that income from the property into investments in the stock market that will actually be able to make that loss back. So in short, you can't actually claim any losses on your principal residence when you do go to sell, but for some people it may make sense to actually go ahead and sell that property regardless. If you enjoyed this video, please give it a thumbs up and subscribe to my channel. And if you have any questions, please leave them in the comment section below, and I'll see you next week.